We are recording. All right, so here we are. It is Wednesday. We're all remote via our own homes and Zoom, which is not ideal, but this is what we're doing. So we have kind of two missions today. One is to finish chapter 3, and then the other is to review for exam 1, which is on Monday. Okay, I want to remind everybody that we do have a review quiz. Ah, there we go. Review quiz number 1 will be due at 11:59 p.m. Thursday. So that's tomorrow. Okay. So you've got all day today and all day tomorrow to do it. So normally we do these quizzes in class, and they are not an open resource kind of situation. But obviously this is not an in-class situation. So open resources, you know, use this to your advantage, right? Quizzes are um, 50 points. So this is a good opportunity to bank some points. It's 10 multiple choice questions. You'll be able to upload either pictures of your quiz or upload files. And if you have any questions, absolutely shoot me an email as you're trying to figure out how to upload or whatever. Okay, if you have any issues. All right, so that having been said, let's finish talking about chapter 3. All right. So on Monday, we talked about conversions, and from a tax planning perspective, how we can convert, hopefully, ordinary income that gets taxed at ordinary rates to some type of income that gets taxed at a beneficial rate. Okay. And so this problem that I have right here is very similar to the one we did on Monday. And we've got Martha Stewart, and she's contemplating 3 different investments, each with the same amount of risk. So we've got a high dividend stock that pays 7.3% in dividends annually, no appreciation potential. We have a taxable corporate bond that pays 8% annually. And we have a tax exempt municipal bond that pays 5%. Okay. Remember, all of these rates of return are pre-tax, and what we are concerned with is after tax. So you're always given pre-tax, and we need to find after tax. Okay. The easiest one to work with is always going to be the municipal bond, right? Because remember that municipal bonds are tax exempt. And so what tax exempt means is that pre-tax equals after tax. Okay. So if we're trying to figure out what the after-tax rate of return is for that municipal bond, it's just equal to our pre-tax. So that's a 5% rate of return. Okay. So now we've figured out the rate of return, the after-tax rate of return for that first investment. Okay. So next, let's look at the taxable corporate bond. Okay. And so we know that corporate bond, we're still looking for after tax, but we know that its pre-tax rate of return is 8%, okay? And we know that ordinary income is taxed at 37%, okay? And so that is the tax rate on that corporate bond interest. So then we know that we use our fantastic formula, all right? And so now we've got 8% times 1 minus 0.37, which is 63%, okay? And so we know that our after tax rate of return for our corporate bond is 5.04%, okay? So that's after tax for that corporate bond, okay? Now we have the most complicated of the three, and that's this high dividend stock. Okay. Now, the reason that is the most complicated one is because remember that dividends are not taxed at ordinary rates. Dividends are taxed like long-term capital gains, and they have preferential tax rates. And we're told in this situation that dividends are taxed at 20%. Okay. So then oops. We're told that the pre-tax rate of return is 7.3%, right? And then 1 minus our tax rate. In this situation, remember that we're told that dividends are taxed at 20%. And so then our after tax rate of return is 7.3% times 80%. And that's 5.84%. Okay. And so now we have those three investment choices, and we've got their after-tax rate of returns for all three. Okay. And now all we have to do is find the one that is the largest, and the one that has the largest after-tax rate of return is that high dividend stock. And so that is the one that we would choose. Okay. Now, a very common question, kind of along these same lines, is you could be given the information for this high dividend stock, for example, and be told that a high dividend stock has an after-tax rate of return of 5.84%. Okay. And then you could be asked what pre-tax rate of return would some other investment have to have in order to be able to match this 5.84% after-tax rate of return, okay? It's the same type of question. It's not any more difficult than this. You just need to pay attention to what you're asked for, right? So if you're asked for example, so let's say, hold on, let me admit, folks. All right. So let's say, what? What pre-tax rate of return would the corporate bond need in order for Martha to be indifferent between the high dividend stock and corporate bond. Okay. So what pre-tax rate of return would the corporate bond need in order for Martha to be indifferent between the high dividend stock and the corporate bond? Okay. So what do we know in this situation? Well, we know that in order for Martha to be indifferent between those two investments, they have to have the same after-tax rate of return. Okay. So now we know after tax. We're trying to figure out pre-tax. Okay. And now we have to think about, we need this one minus our tax rate, right? Well, in this situation, right, we're talking about the rates of return on a corporate bond. And we know that corporate bond interest is taxed at our ordinary rate. And we know that Martha's ordinary rate was 37%. Okay. So now, in order to find this out, we just have to solve for pre-tax. And so in order to solve for pre-tax, we take 5.84%, 0.0584, and divide that by 63%. And so we get 9.27. Would then be our pre-tax rate of return. So if that corporate bond paid us a pre-tax rate of return of 9.27% instead of the 8% that we were told, then Martha could choose either that high dividend stock or that corporate bond and still make the same after-tax rate of return. Okay, so when you're asked a question like this, that's how you deal with a question like that. Okay? Any questions about that? Awesome. All right. Well, sadly, there are limitations to conversion strategies as well, right? We talked about that with timing. We talked about limitations in timing. We talked about limitations in shifting. There are also limitations to conversion strategies, okay? The Internal Revenue Code itself has all kinds of provisions and limitations that says things like if, for example, your employer decides to pay your wages in stock instead of actual dollars, right? Then that stock is not an investment. That stock is then earned income because that's in place of wages. Okay. So then the value of that stock would still be taxed at ordinary rates because then that would be earned income. Okay. So that's an example of a limitation that's in the code. We talked about implicit taxes, right? And remember, implicit taxes are kind of what you lose in pre-tax rate of return due to different tax properties, right? So remember, implicit taxes don't have a stated rate. Explicit taxes have a stated rate. Implicit taxes are what you lose in rates of return. And the best example of that is municipal bonds. Municipal bonds tend to pay less from a pre-tax rate of return because it's tax exempt. And so they know that you don't have to pay taxes on that interest, so they don't have to make them as attractive from a rate of return perspective. Okay. And then finally, there are judicial doctrines that limit our ability to convert as well. Okay. And these sound kind of exactly like what they are. So the business purpose doctrine, for example, the IRS and the courts have the ability to look at transactions. And if the only reason for a transaction is tax avoidance, then they can say that that transaction does not have a business purpose. In order for a transaction to have a business purpose, it has to make some economic difference besides just a tax difference. Okay. Step transaction is actually pretty similar to that. It just means that they can consolidate a transaction that has multiple steps down into one step and take a look at the impact of that consolidated transaction. Okay. Substance over form is like letter of the law versus the spirit of the law. Okay. And then we already talked about economic substance that kind of rolls in with business purpose. Okay. So it's important to know that there are limitations for all three of the basic types of tax planning strategies. All right. And then the last thing related to chapter 3 is tax avoidance versus tax evasion. Okay. And lots of folks use tax avoidance kind of unilaterally and in all instances. And that would be incorrect. Remember that tax avoidance is legal. The Supreme Court has said quite notably that every American is required to pay their taxes, but they are not required to pay $1 more than what they are required to pay. So there is no penalty. There is nothing wrong with tax avoidance. All right. Tax evasion, however, is the willful attempt to defraud the government. Tax evasion is illegal. All right. What is the line between tax avoidance and tax evasion? Well, that is a great question. And that's where the courts come in a lot of times, right? But for the most part, the big difference is right there, willful. If you know that you are being overly aggressive, if you know your estimates are incorrect, now that's evasion and not avoidance. Okay. So that finishes up chapter 3. Are there any questions about chapter 3 material? All right, I'm going to stop my share for just a minute so that I can bring up a different document and we'll talk about the exam. All right, hopefully everybody can see my share. Yep, awesome. All right, so reminders for the quiz. All right, remember that we have a review quiz. The review quiz will be, oops, helps if I get my pen working. Due Thursday. And I will post it as soon as we get out of class today. Okay. It's 10 questions, it's 50 points. And I've got the availability right there as well. Okay. Open notes, open resources. Obviously, that's not the way we normally do them, but absolutely take advantage of that. Max out your points on this one. There's no harm in starting off the semester strong. All right, so now let's talk about the exam, okay? So our first exam, all right, it's 170 points total, all right? Remember that it covers chapters 1, 2, 3, and 15, okay? You have a multiple choice section and a free response section, okay? You've got 15 multiple choice questions, 60 points total, all right? from chapter 1, there are 3 questions, okay? And so the things to think about in chapter 1, remember how to calculate tax liability, all right? That is, of course, a big deal. Remember that, oops, not filling status. Filing status matters. So remember when you're going into, excuse me, the tax rate schedule, make sure you pay attention to filing status. Okay. Also in chapter 1 was what is a tax, right? Versus what is a fee. Okay. So don't forget about those things. Okay. Chapter 2, there are 6 questions from both chapter 2 and chapter 15. All right. And the reason that there are, there are 6 questions from chapter 2 and 3 from chapter 15. Okay. The reason that there are so many questions from chapter 2, for example, is that there are no free response questions from either of those chapters. Okay. So remember that chapter 2 was all about uh, statute of limitations. Okay, good. You guys can still see my sharing, right? My screen blipped and I want to make sure that I haven't lost y'all.
We're still good.
Awesome. All right. So remember, chapter 2 was about statute of limitations, right? When you have to file, right? When do corps file tax returns? When do individuals file tax returns, right? And then what happens if you don't file those tax returns, right? So make sure that you go back and look at practice questions for chapter 2. Look at the questions in the PowerPoint for chapter 2. Okay, those can be really helpful. All right, chapter 3. Chapter 3 is all about tax planning. Okay, there are 3 multiple choice questions from chapter 3. Remember that I warned y'all that one of those chapter 3 questions would be, what is the purpose of tax planning?
Aren't seeing you right on this screen anymore.
Well, that's
Like I still see the multiple choice screen and like I saw the purple with
okay.
2 and 15, but what you just wrote on there, we can't see.
Okay. Hold on 1 second. I'm going to stop my share and then I'm going to redo my share. Oops. Technology is amazing until it's not. Ooh, do you have it now?
Yes. Yep.
Awesome. Woohoo. Okay. So remember from chapter 3, one of those big ticket items, what is the purpose of tax planning, right? We talked about this. The purpose of tax planning is not to minimize your taxes, right? Because we can all minimize our taxes by not earning anything and not buying anything. It's not a great strategy, right? As a life plan, it's not fantastic. The purpose of tax planning is to maximize your after-tax wealth, That's the purpose of tax planning. Okay. Remember that we've talked about 3 different types of tax planning. We've talked about timing, shifting, and converting. Okay. So pay attention to those. Also, remember that we talked about judicial doctrines. Okay. Those judicial doctrines are great opportunities for multiple choice questions. Okay. All right. And then chapter 15 was all about entities. All right. And remember that related to those entities, we talked about which entity files which form. All right. So pay attention to that. Remember that we have those things called a single member LLC. And remember that single member LLC is kind of a wacky thing because that single member LLC is called a disregarded entity. And because it's a disregarded entity, it has a single owner and files taxes on owners form, right? So if you have a single member LLC that is owned by one person, then all of that LLC income flows through to a 1040. If, however, you have a single member LLC that's owned by a C corporation, then all of that income flows through and is reported on the C corporation's Form 1120. Okay, so remember some of the interesting things about those different entities, right? Remember which entity gives us the most flexibility, right? The entity that gives us the most flexibility is a sole proprietorship. The entity that gives owners the least flexibility is a C corporation. Okay. C corporations have other pluses and minuses. Remember that incorporated entities in general shield us from liability, right? So that's a big plus. They have a corporate veil, and that is helpful to the owners from a liability shielding perspective. Okay. All right, so that's a pretty comprehensive look at the multiple choice section. Now let's talk about the free response section. Okay. The free response section is where you're going to get, and let's see if my share catches up because I don't see it moving. All right, hold on. Let me re-up my share. My share seems to be inconsistent at best. All right, here we go. Now we're back. All right, so you have 4 free response questions worth 110 points. All right. Um, and so this is really pretty consistent across the semester that the free response section of these exams will be worth many more points than the multiple choice section of the exam. And most folks find that that is a good thing because the free response section partial credit is typically a really good thing for folks. So with that, show your work. I know tests are stressful and folks get in a hurry, and some folks, myself included, don't have great penmanship to start with. But write as neatly as possible, because that helps me help you, right? If I can't read it, it's hard for me to know what you meant to say. Okay. So from chapter 1, you're going to have a problem with 3 parts. Okay. So 30 points total. All right. First, you're going to have to find the tax liability. All right. And so you're going to be told that a taxpayer has $80,000 of taxable income and $10,000 of municipal bond interest. Find their tax liability, and you'll be told their filing status. Okay. And so then you'll have to go to the tax rate schedule and calculate their tax liability. Okay. Remember, pay attention to filing status. And remember only to calculate their tax liability on their taxable income, right? So if you're given municipal bond interest, remember municipal bond interest is not taxable. So you don't have to put that in your calculation when you're calculating tax liability. Okay. Second part, with the same information. So you're not going to have to recalculate tax liability. Find the average tax rate. Okay. And remember, average tax is tax liability over taxable, oops, income. Okay. And then again, in that same world, calculate their effective tax rate. And so that again is that same tax liability over, this time, remember, it's total income. Okay. So this is where you put that tax exempt income into the equation. All right. Now, remember that your effective tax rate, right? Your effective tax rate is typically going to be lower than your average tax rate. And that makes sense, right? Okay. And then finally, you're going to have to find the marginal tax rate for an increment of income or deduction. So remember that when you're doing the marginal tax rate, that's our change in tax liability over our change in income. Okay. So you'll start with your original tax liability. And then if you have additional income, then you'll add that income in and then find your new tax liability. If you're told that you have additional deductions, then you reduce that income by the amount of those deductions. Okay. So that is the chapter 1 free response section. Okay.
I have a question on marginal tax real quick. That
Yes.
change in income, that's the change in total income, not like taxable versus untaxable, just total
Ooh, great
income,
question. No, this is going to be, let's be specific. That will be
taxable.
taxable.
Okay, so like municipal bonds, we're not going to count. So we're
Exactly.
taking the, okay. the bottom of the average plus anything we add for that marginal tax part. Okay.
Yes. Yes, that is absolutely correct.
Thank you.
You bet. All right. So, and then there's one problem that is kind of a mix of chapter 1 and chapter 3, because we talked about it in chapter 1, but we really focused on it in chapter 3. And that's choosing an investment based on after-tax rate of return. Okay. And that's 20 points. And that's going to use this formula. Remember, that formula will not be given to you. You need to remember that formula. So I would absolutely commit that formula to memory and be able to use it a variety of ways, right? And so we just did the Martha Stewart problem. That's a great example of this. Okay. You're going to be given 3 different investments. One will be tax exempt, one will be a high dividend stock, and the other will be a corporate bond. And you're going to have to choose based on the after tax rates of return which one the taxpayer should invest in. Okay. And so that's 20 points. And then we get into the serious business in chapter 3. Okay. And so in chapter 3, then you'll have a shifting problem, a timing problem, and then a shifting problem from a jurisdiction perspective. Okay. So the shifting problem between family members. All right. We did one in class on Monday, right? That was Monday. That was Tawana and her son. Okay. So if you hire a family member, what are the tax savings related to that? Okay. So you'll need to be able to do that. There will also be a timing problem, and you'll be given either income or a deduction, and you'll be asked, should you recognize either that income or deduction in December of the current year or January of the next year? Okay. And so remember, you need to ask yourself a couple of questions, right? First, is it tax cost or tax savings, right? If it's tax cost, then that's an income situation. If it's tax savings, it's a deduction situation, right? If it's tax cost, you want to minimize the tax cost or maximize after-tax income. If it's a deduction and it's tax savings, you want to maximize the tax savings. Okay. Remember that these problems are where you're going to need that present value table. And you'll be given a fresh copy of tax rate schedules and a fresh copy of the present value table. Okay. So you'll have all of those tools that you need in order to do that. All right. So there will be a timing problem. And it'll be, the similar format to what we've done in class. All right. And then finally, you'll have a shifting problem that deals with different jurisdictions. And we did one in class like this too. This was the Hyundai problem. And I think there's a homework problem that's very similar as well. Okay. And so you will be given what their pre-tax profits. So you'll be given corporate tax rates. You'll be given pre-tax profit expectations, and then you'll be asked to choose a state. Okay. And so for all of these things, obviously show your work. Remember that this formula works with percents as well as dollars, right? So this formula will get used a lot on this exam and exams in the future, but certainly this exam. Okay. And that is a pretty comprehensive look at exam one. All right. I'm going to stop my share. And do you guys have any questions? All right, so if you guys don't have any questions, then let's we'll hop off our Zoom. And oh, go ahead, Jackie.
I actually do. I haven't looked, but like you had mentioned, are there ways to do example problems? Like I've already completed the homework. I think it's all due already. Like, is there a place to do practice problems where we can check our work?
So there should be in the files. Oh, here, this doesn't help if I'm writing, if you guys can't see what I'm writing. It's, one of those things, right? All right. I think you guys can see it. I don't know how is
Yeah.
the green writing though. Is that green writing kind of here? We'll do this. Um, so in the files section of Canvas, there are
Practice problems. Okay.
practice problems. Those are in a folder. And then there is also a folder with practice problem keys. Okay.
Awesome.
And I don't think the key to chapter 3 is posted yet, but I will make sure I post that today. There are also, and there will be by the weekend, the key to the chapter 1 and 2 in class graded, that will be there. And the key to the review quiz will be posted. Okay. The other thing that you have the option to do is all of the homeworks once the due date has passed, all of the homeworks you should be able to do them as study attempts. You should be able to go back
Awesome.
in and rework them because they're algorithmic.
Okay.
If it turns out that that doesn't work, let me know and I'll switch the settings. But also homework should allow for study attempts.
And smart books should allow for recharges, right?
Yeah, you should be able to go back
Okay.
through and reread and do. Obviously, it won't change, it won't change any points or anything, but you should
Yep.
be able to go back through. And even without, if you're not in SmartBook, if there's like a section that you want to read, you have access to the,
To the book.
to the book itself. I really like the SmartBook because it asks you questions and it's a much more active way to read the book than,
Yes.
especially with an online text for me anyway. It's hard for me to stay focused on an online text, so I like the questions. I mean, you like them, but you don't like them, right? Because, you know, as much as you can like anything class related, I think the questions in the Smart Book are helpful. So, does that answer your question, Jackie?
Yes, very much.
Awesome.
Thank you.
You bet. Any other questions? All right, I'm going to stop recording.